Okay, before we get started, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, alright, so let's have a look at what happened last week. We had a quite busy week in terms of central banks making monetary announcements on their monetary policies, should I say. This week, it's a much quieter week. Let me bring it up so everybody can see what we're talking about. But I guess the highlight of last week, and there's really only one thing to mention here, is the Fed Reserve. Okay, so the Fed Reserve pretty much cooled down any rate hike expectations that the market may have had, and effectively they killed the US dollar. So we saw the US dollar lose ground against everything last week. Stocks went up, money shifted from US dollar. So if you think about it from an investor point of view, someone who's trying to get a return on their money, if the expectation was that they were going to keep increasing rates, then it makes sense to have your money in cash and get a good interest rate on it. As soon as that expectation came off the table, basically a lot of that money changed formats and left the cash itself and went into commodities, went into stocks and so forth. So the real big winners last week were all the commodity driven currencies like the Aussie dollar, the Kiwi dollar, the Canadian dollar. These are currencies that benefit from commodities increasing, and the double effect as well, like because it's always a pair, the Australian versus the US dollar, it double gained the momentum. So that's what happened last week. So we need to analyze what's on the agenda for this week. What has that left us? A lot of the patterns that we were looking at have kind of gone out the window. We'll analyze again, we'll see what we can find, and let's see if we can pick up some new trades. For this week, our focus changes towards the euro and the pound. They're the major ones that have effectively done. We've got data coming from them. I guess if we have a look at the euro over here, German ZEW sentiment numbers, and we've got the targets at L2RO. Pound, we've got retail sales, and we've got CPI numbers. So that's really the highlight for the week. We do have unemployment claims from the US, but it's more on the minor side. Aussie dollar, virtually we have nothing. We have the governor speaking, but it doesn't necessarily give it a strong enough impact to affect our currencies. I think the one to look out for this week coming due to data on its own is going to be the Euro USD. Okay, so this is our data-driven currency for this week coming. Let's bring our charts up and let's have a look at what's going on. There really isn't much more to talk about on the fundamentals this week. It is a little bit on the quiet side. So let's get started and let's have a look at the Aussie dollar. Okay, first question to everybody. Did anybody take this trade here? Is anybody on that trade? Right over there. Can I just get a show of hands if anybody took it? I can see why people may have not wanted to take it. According to our rules, is it a legitimate trade, guys? Yes or no? Is this candle formation on an uptrend pulling back with an engulfing candle? Is it a legitimate setup? Yes, it is. Okay, now one thing one of the reasons I bring this up is I actually didn't take this trade myself as well, and I actually saw it. So I have no excuses. It's not like I missed it. I decided not to take it. Now I decided it. I do have one rule in my set of rules that prevented me from taking this one. All right, but this is a very difficult psychological trade to take. All right, because the markets, we get this feeling that, oh, look, it's just moved this amount. Is it going to continue to go? I'm not sure. It always gives us that weird feeling. Remember when we took this triangle here last week? I think it was over there and over here. We said, is this going to continue to go? And we saw what happened. So it's psychologically a tough trade to take. Now, the only reason I didn't take it is because this engulfing candle was just so big and it left me very close to a high, and my distance from these moving averages was just a little bit further than what I liked it. Okay, so for example, if that setup, if this double candle setup had happened just a little bit lower and left me around there, then I would have taken the trade. All right, so if you know that there's a particular setup that you don't like for whatever reason, you don't really need, the reason is very unique to yourself and to your individual psyche. So for me, it's just as I explained it. So if it doesn't look correct the way that I like it, well then I don't trade it because I feel uncomfortable about it. Okay, if it helps you get a better result, then it's a great rule. If it turns out that you're missing out on too many trades, well then one, you either got to change your style of trading because that style doesn't suit you because it's too much in contradiction to the way that you feel, or two, you need to alter that rule a little bit so that you pick up more of those trades. All right, so that's why I mentioned it, because it's very, very important to make sure that we understand that aspect. Okay, now since none of us are on that trade, I didn't get a single yes. Everybody did not take that trade. And where does this leave us? It leaves us with, now let's think fundamentally. Fundamentally, the Fed Reserve said, it doesn't look like we're interested in raising rates. Okay, so that kind of opens up the door, Aussie dollar, to head towards that 80 mark. All right, now just remember, just because I'm mentioning the 80 mark right now, I'm not saying it's going to go there. I'm just saying the door is now open. We have cleared significant areas that had to be cleared, and really what I'm looking for right now is any kind of a pullback to try and get me in towards that ride to around about that level there, which is the 80 mark. The 80 mark is going to be strong psychologically. Every decade number is strong psychologically. I don't know if it's going to happen this week, but the door has definitely opened, so possibly over the next 3-4 weeks we could see a push towards that area. Now if I'm wrong, do I care? No, not really, as long as I pick trades that have the highest probability along the way. That's all we're looking for, guys. We're not trying to predict the market. Who has that, now that I just said that, who has the market statement next to the computer right now? Can I just get a show of hands? And if you don't have your market statement next to your computer, just type in question mark that you don't understand what I mean. Okay. Be honest, if you don't know what it means, type in question mark or something. Okay, everybody that typed in your question mark, your homework is email me back from the invitation that you received today. Email me back what is my market statement, okay, and then I'll email you individually. Okay, so my market statement is simply my philosophy on trading, and I don't mean mine as in me, Christian. I mean mine as in you got to make your own one as well. The market is unpredictable. Okay, it is an irony that I'm trying to predict an unpredictable market. However, human beings are creatures of habit. We behave in patterns. We are looking for an edge in the market that gives us a pattern that increases our probability. I give up and I release myself to probability. If I'm incorrect, I don't mind. Over the course of a big enough sample space, I'm going to hit enough correct trades. Okay, so there you go. So that's my market statement. I have it next to my computer all the time. I know it off by heart, and it just helps me just blindly take trades with a smaller care factor. Okay, so if we hit 80, that's fine and that's fantastic. If we don't, it doesn't matter as long as we find trades along the way. All right, so the next trade that I think is going to come our way, it's going to be some kind of a pullback. We're going to look for it, nice inside candle or an engulfing candle. Hopefully it's not as big as that one, and it's very much in the sweet zone, and then we're going to hit it in that direction. Okay, for those of you who have been following your Twitter or not following your Twitter, I have been a little bit more active on it, and as I see it, I will push it out. For those of you who don't know what my Twitter handle is, it's chatfx. Okay, so it's at chatfx. Look it up, follow me. If you set your messaging to notify you live, you'll receive it as an SMS in real time. Okay, let's move on. That's Aussie dollar, Euro USD. Okay, I've got a trade. It's a little bit of I haven't taken one of these trades for a while, but because I just don't have much on today, I'll put it out to you guys and see what you guys think. I think that I've got a little bit of a double top there. My distance away from my moving averages is I'm fairly much at a good distance that I like to be away. I kind of feel that this is a bit of a double top over there, and I've got a nice inside candle set up. So the logical trade would be to trade the break back down. Okay. Who likes this trade? What do we think? Should we take this trade live? Okay, I've got 1, 2, 3 yeses. I'll go with the majority here. Someone says someone's already gone in short already. Okay. All right. So it looks like we'll jump in live. Okay. Now let me zoom in so we can all see the trade a little bit better, and I'll explain it. The trade that I'm about to take is based off price action of these two candles here. Okay. Now it's occurring at a double top. Okay. And essentially this candle with a little fractal right there signifies the high. The next candle along is completely inside the first candle. Okay, so candle 2 is inside candle number 1, and the way that I trade this is essentially I place my order at the break of candle 2. I'll become a seller. If this doesn't break down and then goes up and breaks that high there, then I need to go and cancel the order out. Okay. And finally my stop, I'll place it about 5 or 6, 7-ish pips above candle number 1. All right, so let me measure all that out right now and let me size it up. I'm going to take a $60 risk on this trade. My entry is going to be, I need to write this down. Bear with me 1 second, get myself a piece of paper. My entry, the low of this candle is 112.55, 112.55. So I'm going to jump in at 112.54. 112.54 is where I want to jump in. And my stop, I'm going to go for 95 pips. Okay, so at 95. If I'm going to risk $60, just bear with me. I just got to get off my chair and get a calculator. 1 second. Okay, I'm back. So that's 60 divided by 95. So I've got to trade at about 63 cents per pip. So let's make it 0.05 because this is USDs converted to Aussies. 0.005. Okay, so here we go. Right click, trading, new order. Let me just double check the account that I'm in. Yep, I'm in the correct account. So the size that oops, sorry. So 0.05. The number that I want to get in at was 112.54. My stop 113.42. I'm assuming everybody knows how to do all these, and I'm going to place a target around about 111.80. I'll adjust it in 1 second. I'm happy with all that. Place it. Okay. Need to just bump this one up once. little bit. Give me one moment. Make that 50. That gives me that 8 pips that I want. Okay, so now let me just measure out. My target's going to be just 2 to 1s around about here, and of course I always have my 1-to-1 target as well, where I will close out or partially close out of the trade. Okay, so just to summarize what I've done, I've got a stop sell when I break that bottom candle to go into this direction. There's my target and there is my stop. Any questions? And here are the details of my trade down there. Okay, all right, no questions, I will move on. GBP USD. Okay, GBP USD, tricky one. Okay, GBP USD, it looks like the moving averages are just crossing right over there, which signals we've taken out that high, which signals we could be starting in that direction. This would also support the lack of interest or the lack of action from the Fed Reserve to push on with the USD interest rate cycle, so it would encourage this movement as well. So what we're going to do with GBP USD is let's wait for a pullback into this area. Let's see if we can get a nice candle action entry, and then we are going to become buyers. Okay, I actually like this one as a buyer more so than the Aussie dollar, purely because if you look at it, this has been on a down for such a long time. This could be the turnaround and we start heading back up. So it just feels a bit nicer, but as I said, I'm happy to take both trades, whichever one comes along. Okay, so GBP USD, it looks like we've just changed directions of trend towards an uptrend. So let's wait for that little bit of a pullback. Let's look for that supportive candle pattern, that price action inside candle or engulfing, and as soon as we get it, we'll take a trade. All right, so right now GBP USD, we're doing nothing. Let's move on. Let's have a look at gold. Okay, gold, I've got this line that I drew quite a little while ago, and it seems to be holding that top line there. What I want to do now is I just want to bring it across here, and I've got a little bit of a rising wedge. Okay, rising wedges are quite fun to trade. It's getting a little bit narrow in here, so really the only trade that I'm looking for is the breaking trade in the downward direction. All right, now it is gold. For those of you who've never traded gold, what I always suggest because I get a lot of questions, people asking me, what is the size of gold? How does the gold work? What I'll say to you is this: go take a demo trade on gold, take the smallest trade that's possible, and just monitor the numbers and work it out for yourself so that you get comfortable with the understanding of how much movement equals how much dollars gained or lost. Okay, the quick summary is gold is valued at around about 12. Let me get a pencil here. At about 1250. Okay, so if you buy one contract, all right, and it goes up from 1251 to say to 1252, all right, and you've only got one contract, well then basically you've made $1. Okay, so what you need to look out for is how much is the minimum contracts that you can buy. Sometimes it's 10. All right, so that would mean that this movement here would be a $10 movement. All right, so but essentially that's how it works. Take a demo trade, have a look at it. All right, so the trade that looks to be setting up is a breaking candle down and then into this direction. It's set. We just need to wait for it to see if it actually happens. Okay, so look out for that one on gold. I will tweet it out if I see it as well. US yen. Tricky. Okay, this is a strange one. Normally I would say there's a bit of congestion here. All right, this is typical. I would normally say this. I've also got right now inside bars setting up which would want me to trade in that direction. However, something is telling me that just does not compute. Um, and maybe I'm trading against what I'm seeing. Maybe I'm not seeing it correctly. But what I'm also seeing is I'm kind of seeing this one like maybe we just broke down, and what the market really wants to do now is continue down in this direction. So I have a very simple rule. When I get confused with my charts and I don't know what to do, I just don't trade this chart until it looks a little bit clearer to me. Okay, so in normal, it's not exactly a clean breakout, so it's not like a typical breakout that you get the congestion and then it just moves down. That would be clean. It dipped down, but these are just wicks as well, so there's obviously a lot of buyers that are coming into this market and trying to push it back up, but the lower that it pushes, these buyers are running out, and eventually what that means is the sellers are going to take over and we're going to go down in this direction. Now again, that's not a good enough reason for me to say let's sell US yen right now as much as I want to. In fact, the last setup on US yen would have been this one there, and I think we might have traded that one last week. That was a inside candle selling down, or if you didn't get that one, you could have got this one there, engulfing candle down. So both of those trades would have hit your 1-to-1. Some of you may still be in a trade that haven't hit the second target, or you're very, very close to hitting the second target. As far as this inside candle to try and trade it in this direction, no, let's leave that one alone. So with US yen, what you should really look out for, if you get a nice breaking candle, one that finishes like this, well then that's a clear signal to continue to sell into it. Okay, the only thing in the back of my head, because this is yen related, okay, it's very, very curious to see how the Bank of Japan will react to their policy announcements which they made a week and a half ago. Sometimes they've been known to come in and do a bit of intervening in the market, and if you've ever been on the wrong side of an intervention, you never forget that. Okay, so I'm always a little bit cautious with yen related pairs, and that's kind of like in the back of the mind. In any case, I don't have a clean setup in any direction, so the US yen this week, I'm just going to monitor it. If someone said, Christian, you must trade this right now, I would be a seller. Okay, that's just if I was forced to make a trade, but right now I'm not doing anything. That's US yen. Let's move on. Let's have a look at the euro yen. Who is still in this trade? Who's a seller in euro yen with an open position still at this moment? Okay, I've got one, I've got two, I've got three. That's really good, you guys that still got open positions. It shows a lot of development as a trader, the patience. The setup was here, I think last Monday. We pushed down very heavily. We got to the 1-to-1 point, but then we pushed back up and we're still in there. Okay, so the good news is that it's compressing. This market is compressing. And if you analyze, let me just zoom in a little bit so I can see it a bit better. If you analyze these wicks on these 3 days in a row, it's like kind of longish wicks, but then comes up and then comes down and comes up. These are buyers, orders in the market. They're trying to push the market out, but they're running out of steam. Okay, so that's a really good sign if you're a seller. Generally, it would mean that once we get through it all, all those buyers run out, and then basically we dive bomb down. All right, so fingers crossed, hopefully that plays out and you can all hit your second targets on those trades. So right now, because we got positions open, I don't want to add to it. The setup is still there. Second targets has not been reached on this candle formation that I'm got my cursor on right now. Any questions on Euro Yen? Let me just have one quick look at a 4-hour chart for 1 second. Okay, if you were not in a trade right now and you were looking for one, we can see here there's compression, heavy compression. The market's compressing in, it's getting tight, and it's, you know, there's a higher probability that it's going to break down. Not based off this 4-hour chart, okay, but based off the daily chart. So let's just wait and see what happens. If someone was looking for a trade, you could possibly find one here off a 4-hour chart. You just got to wait out. I would say London today will knock us out of this area here. This trading range is very narrow. We're only talking about 55 pips, which is very narrow. We can knock out of that very quickly. Okay. All right. So that's what we have for the Euro Yen. I'll leave my chart as it was. Let me get rid of these lines. Kiwi Dollar. Kiwi Dollar. Okay, I got stopped out on a trade that I took on Thursday, Kiwi Dollar, based on a candle flip strategy. I don't normally trade the strategies on this account, but I did that day, got stopped out. This top line that we drew held. It held nicely. It's still there. We got an inside candle here. Okay. I saw this morning. I thought about it. I have a friend who trades broadening shapes. Like, see, this one's getting wider. Okay. I normally trade the opposite. I've never really traded broadening shapes, but I was speaking to him, I think it was just coincidentally, I think it was last Friday, we were just chatting and he said, oh, did you see this pattern? I can't remember what he said to me, and I said, oh, but I don't normally trade those, and he goes, oh, just analyze them, look at them. And over the weekend I went through and I looked at, I don't know, say 30 odd, and they're not that, they don't appear that often, so they're not, like this one is a really nice one. It's clearly getting wider and wider. Normally, effectively, really, you're just trading a resistance line or a support line. You know, that's what my conclusion was. So if someone wanted to trade this down, that would be a legitimate trade. Okay, I still feel we're in uptrend. All right, so we're sticking to that uptrend, and this market is really pushing hard. It's trying to get through that 69 level. I did not trade this one this morning. The trade's already gone by a little bit, so it's kind of too late for me to jump into it right now. But this is one that I'm interested to see. If the pattern plays out, I would expect it to at least get to around about this area here. And when it does, what it will open up for us is a uptrend pullback trade. Okay, so I'm interested in that trade. So all I wanted to do was just mention broadening shapes. What I might do is do a bit more research on it, and if I feel there's enough of an edge there, I will present it in one of our Thursday classes in the future. At this stage, it's just an idea. I do know someone who trades quite well and swears by this pattern. I've just never done it. Okay, so I'll do a little bit of work on it and I will let you know. So in the meantime, what we're looking for on Kiwi Dollar is we're looking for a pullback somewhere in that area there. If we get the nice price action set up, then we will be buyers. Okay. Question. Why did the fractal not appear this morning? Okay, so the question is, why is there not a fractal over there? Is that the question, Simon? Okay. Fractals is the fractal really, it's a 5 candle sequence. All right, so in reality it's 1, 2, 3, 4, and 5. Okay, at this stage, this would be candle 1, 2, 3. Oh, sorry. Sorry. It's, oops, I lost my pen. It's 1, 2, 3, 4, and this is the 5th candle. This candle has not finished yet. When this candle finishes, so tomorrow morning, on the proviso that this candle does not go higher than that level, tomorrow morning you will see a fractal over here. Okay? Okay? So that's what it was. Question, second New Zealand trade, what was the strategy used on that? Okay, there was a second trade that occurred on one of the accounts. It was basically off this. It was off this line here, and on a 4-hour chart. So there was a stop over here, and we just got stopped out on that as well. So it was effectively the same trade, just a little bit continuation. Okay, so if you have a question on that, email me and I'll explain it a bit better. All right, so Kiwi Dollar, we got our strategy worked out. Euro Aussie. Oh, Euro Aussie. This candle here just wrecked everything for me. You know, you got such a big candle in the middle of nowhere, it kind of just hurts everything. We got a compressing market. All right. And effectively what I was looking for, something, you know, to send me in this direction. But I really don't have anything at all. This is a really horrible chart. Let me have a quick look at a 4-hour. There's a little bit of converging there, but it's this candle again is a spoiler. How big is this candle? It's like a 450 pip candle. So whenever I get a chart that's got such a big candle in it, kind of throws everything out the window. So look, Euro Aussie, let's just leave it alone. It just looks a little bit too ugly. So right now, don't touch it. Aussie index. Okay, Aussie index, we noticed this, I'll show it to you, this bit of a channel happening. Okay, we traded off the channel up here. We traded there, we hit our 1-to-1 target on one trade. The market then bounced back, and that's largely related to of course, the stock market recovered. I know it's the US dollar that got the drastic news, but a lot of money shifted to equities. Of course, the US 500 and the Dow went up, and hence the Aussie 200 followed. So that's largely caused by that. The level there is held, and what I've noticed on a 4-hour chart is I'm starting to get a little bit of congestion in here. So I've got the possibility to try and trade in a 4-hour chart within this range, because this market has a night, let's call it a night shift. All right, so effectively, everybody realizes that the Aussie 200 is only technically open from 9:50 in the morning to 4 o'clock Australian time, and after that it has a recess, and then what happens is an artificial market is created which follows the UK index, and then later at night follows the S&P, and then basically in the morning it resumes, and it continues on and on. But technically it's got a night shift, which is in theory the market is closed. So I don't like trading a 4-hour candle with a market that is closed, because the 4-hour candles that are caused during the closed level of market, then the information captured by them is not as efficient as when the market is technically really open. So that's why I prefer to stick to my daily. So let's do that. And having seen, everything that's just happened. Let me just get rid of those parallel lines for one moment. This triple candle formation could be a reversal, could be, but I need to wait to see what this last one looks like. All right, now the only thing is, I would really want this one to end up at least like this. All right, and if it did, well then I would be willing to trade it down back off that channel. But it's already 406. I don't think it's going to happen. All right, so for the Aussie 200, best, let's just leave it. If I see a legitimate setup in the morning, I'll tweet it out. All right, and if I do see a setup, it's going to be a counter trend. It's basically off that channel that I just had drawn up, and we'll be looking to trade it in a downward direction. Okay, so there you have it. Any questions on anything? There is a question inside candle today. Which market, Karen, are you talking about? Aussie 200? This one here, that one there's not an inside candle, so I'm not sure. I might have changed. Oh, that was on the 4-hour candle. Okay, so yeah, we won't take the 4-hour candle, but there possibly was. Okay, let me review quickly what we've done. If you have any questions, please type them in right now, and I'll address them for you. Okay, Aussie dollar. Aussie dollar, we're in an uptrend. We're waiting for a pullback to see if we can get a nice price action entry. Euro USD double top. We've got an order. We've not triggered into the market. We are selling at 112.54, stop at 113.50, and our target, our 2-to-1 target, is around about the 110.62. Of course, don't forget to take action at the 1-to-1. GBP USD. It looks like we've just started an uptrend, so we'll be looking for the next pullbacks. Okay. Gold, we have a rising wedge, usually very, very good trading pattern. What we would be looking for is a breakout candle, a bearish candle that looks like that, and then you can be a seller on the back of that. US yen, it's a tricky one to trade right now. It looks like it's just falling down the edge, and but we said we're going to wait and look. Euro yen, we're still in trade. Some of us are still in trade, so we're not doing anything. Kiwi dollar, broadening pattern, which we will investigate further, but at the moment we're looking for a pullback to be buyers. Euro Aussie, ugly looking chart, let's leave it alone. Aussie 200, we may have a 3-candle formation to be sellers in the morning, and if that happens, I'll make sure that I tweet it out. Okay, a couple of questions. Somebody just asked, can I explain what swaps means on the trading platform? Okay, all right, I'll explain it to you as quickly as I can, and we'll use the Aussie dollar as an example. When I buy Aussie dollar, okay, what I'm really doing is I am buying Aussie dollars and I'm selling US dollars. Okay, so what that means is that the Aussie dollar, when I buy it, I will receive interest rate at the Aussie rate, and I'll have to pay interest rate at the US rate. So the differential between the two is what they call the swap. Okay, and in certain combinations you will receive swaps, and certain combinations you will pay swaps. At the moment, a lot of the interest rates from the central banks are almost the same, or zero, or thereof. So those numbers are a little bit skewed. But the general rule to remember, okay, if the first currency has a higher interest rate than the second currency, okay, and you are a buyer, you will receive. And the opposite for the other combination. Okay, so if the first currency, Aussie, has a higher interest rate than the second currency, USD, which is the case, and you are a buyer, you will receive positive swaps. Okay, there you have it. Hopefully that explains it. That's the quick version. Question: Kiwi Dollar is not the large green candle the first of the 5 fractals? Give me 1 second. Which one is it? Kiwi Dollar. Yes, it could. Let me just confirm that, Alex. Look, normally with a fractal, it's if you think of it as just 3 candles, you're pretty much going to be correct all the time. It gets messed up when the candle beforehand has a higher, see, higher than that one. Okay, but this one could still be higher up here. That's when it gets a little bit confusing. All right, let me try and find a good definition for everybody. But to keep it simple, think of it as a 3 candle formation. All right, and at the moment that's 1, 2, and 3, but because this one has not finished yet, we can't lock in the fractal. Okay. Other question? On the swaps, the way swaps works is if you hold a trade overnight. In fact, it's at 9 a.m. It's when the new candle starts. Okay, so even if you open a trade at 8:59 and 59 seconds and close it 2 seconds later, you will be affected by swaps. And don't forget, on Wednesdays, your swaps is 3 times as much because it counts for the weekend. When you trade spot currency, it's T+2 settlement, which basically means your Monday settles on Wednesday, your Wednesday settles on Friday, so therefore you've got to pay for Saturday and Sunday as well. Okay? Any other questions? Can I have a look at the Swissy, US Swiss? I can, but I am reluctant to trade any Swiss pairs for a while after Black Swan, but let's have a look at it for the exercise. It's a really nice shape, that. Okay, if I was trading this, which I don't, I could almost be tempted into a trade right now. Right here, inside candle on the break. Okay, but I'm not trading US Swiss, but anyway, there you go. Okay, so Simon says, is it a double bottom here? Yeah, possibly, but it's better off this line here. Even though I've drawn it through, some wicks and all that, this line, triple touching, is much stronger than that double bottom. Okay? Any final questions? We're all good? All right, this week's a little bit slower than normal weeks. Normally, I can trigger a few trades live during the class. The market is what the market is. We might hopefully have something during the week, so just follow me on Twitter. So when I see it, I'll make sure that I tweet them out, so that we can all pick up those trades. Other than that, I hope you all have a great week. Look out for those news announcements when they occur, if they affect the currency pair that you're trading. I will see you all on Thursday at 3:30 as usual, and we'll have a look at something else in terms of strategies. We'll continue to work through our roster and our different strategies. Very soon we'll be doing a trading challenge as well, so hopefully most of you can participate in that, but I'll see you all on Thursday at 3:30. Bye for now.